Watch your back in every sense of the word, in every sense of the meaning. But all right, guys, we are live streaming now. We're ready to go, ready to rock. Okay, so dun, dun, dun. Navigating the territory, people. We are understanding business structure for your trucking company. And this is me, Cheston Bulgin, coming to you on Monday nights here at MPTA. And this is how you reach me anytime and throughout the week, weekend, whenever. You can always reach out to me this way. Senior consultant at By the Books Consulting, 888-4BTB now. That's 888-428-2669. You can reach us at bythebooksconsultants.com or at youraccountingsuperhero.com, and that is my email. All right, we do accounting, QuickBooks, advisory, consulting, tax planning, and tax strategy, making sure you get to keep your hard-earned money in business advisory. Right now, we're doing a new thing where we're doing one monthly subscription for everything that goes along with your businesses when it comes to compliance and advisory in this area. So if you need bookkeeping, tax services, tax advisory, we look at growing out your asset base, and we build out something called the trifecta plan, where you actually understand how to take your money and grow it over time. We do advisory in that area as well, and we're doing a shift to one monthly subscription, so there's not going to be a large cost for anybody out of pocket at one time. Excited about that, guys. A quick disclaimer before we get started. The following is for educational purposes only. It is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and or legal professional for specific advice. Of course, if you want to forward our conversation here, this is how you do it. You can send me a message, either email me or on social media at Your Accounting Superhero. Okay, and always my promise to you when we get these meetings underway is that you do at least one thing that will help you survive and thrive in trucking. One thing, at least one thing. And also, my intention is for you to have a new level of clarity on actions that you can take over and over again that will make the most impact in your business. And today's conversation is going to be in alignment with that. I believe you're going to get a lot of value out of today's conversation. And I do want it to be an interactive conversation as well. I'm not going to get too deep into it. I'm going to talk about some things that are somewhat technical for some of you. And for a lot of you, it's like you have a foundational understanding of the conversation we're in tonight. And it really wasn't understood on a deeper level of how much this impacts your business and your life, right? Because sometimes there's like a friction point inside of how we apply things that we think we know, because there's a certain amount that we do know. And because we know it to a large degree, we don't see the blind spots, if that makes sense. There's some blind spots that we all have in life in certain areas. If we can remove those and see exactly what the opportunity is inside of this thing, then it will make the difference inside of how your business moves forward and inside of how you actually can see your life move forward because of that. Okay, so we're in this financial literacy conversation. Of course, we want to make sure we are efficient in business. And we're planning for profitability, okay? So how do we plan for profitability? Guys, this conversation is going to be pointed. It's not going to be long, but it's going to be pointed and powerful, okay? We're going to start opening up the conversation about financial statements, really financial literacy. We have a philosophy here, really the building block and the foundational philosophy, if it were, and that we have here is running your company by the books. You know, I always hated looking over my shoulder, like wondering if I get caught for not doing things the right way. And that was one of my things. It still is one of my things. I always want to make sure that my bases are covered so that I can be free, and I can just be free and go full forward with things, knowing that I'm above reproach. Like if they need something, I got it. there's no issue, right? Because I understand what to do compliance-wise for the business. And not only that, not just not looking over my shoulder, worrying about whether or not I'm obeying the rules. And if somebody checks me on rules, I'm covered. It's not just that. It's understanding what makes the difference. Like clearly, like having in front of me, like the information that makes the difference in how my business and life goes. It could be just one little shift. There was a track athlete, a female track athlete. She was a sprinter. She was average. Can't remember her name, but she was an average sprinter in college. She was worked hard, had really good work ethic and everything. And she would never place like in the top 5. But she had somewhat of the ability there to go beyond where she was. She went to the doctor one time and had some studies or some tests done, and the doctor found out that she had like her fascia muscles, like right in her legs, were a little bit tighter than usual, which kind of restricted her flexibility and movement. Right. So what they did was they corrected this thing, right? This thing with her fascia. It was like a little slit. It's like that. She became an Olympic athlete. After that one little slit, she became an Olympic athlete, like world class. We never know what that one thing will be that could take us from where we are to a quantum leap forward in life. Now, if we don't know where to look, now this doctor, they didn't do the test that they did, they would never found out that she had this thing with her fascia. Now, if we don't have the information in front of us to look at, to review, to analyze, then we may never know what that one thing is. This is the key thing about business and life. Now, I was saying that number one is to make sure that I'm compliant and above reproach. But number two, and most importantly, is that I have the information in front of me to see exactly what it is that I can do to make that micro shift, and the micro shift that will make the quantum leap difference in business. And it is just like that. Right? Now, if we're not doing this day in and day out, not looking at these things, not trying to discover what it is within what we've been up to up until now, like all the things that we've been doing up until now, if we're not looking at those things consistently and reliably, then there's no access for that quantum leap forward in business. Like the decision making is not there. So when we talk about this, we really are looking at financial literacy. And when we talk about financial literacy, it comes down to financial statements. Now, these are 3 financial statements that are important to business. Okay, we have the income statement, which is also known as the profit and loss statement. We have a balance sheet, and we have cash flow statement. So how many of you guys, like by show of hands in the chat or virtual hand, are really confident in your ability to navigate through all these statements here in front of you now? Just put a 1 in the chat if you're comfortable, and put a 2 in the chat if you're not. Okay, good, man. It's straight. One of the biggest things is to really see exactly where we are with things. If you're not comfortable with these financial reports and financial statements, you're in the right place. And that really is the beginning, to acknowledge where we are with it. I have a coach that I work with. I have a life coach, business coach. One of the big things as a part of the process to really have transformation in whatever area we're working on is acknowledge and accept. That's what we call this: acknowledge and accept. Now, if I'm not acknowledging, I'm not dealing with reality, like what is. Like if I don't acknowledge what is, then this thing underneath will continue to persist. But the moment I can say, okay, this is what I'm dealing with, well, now I can go to work. I can say, okay, this is the area that I can move forward in life. Now, the thing that we come across and let's keep it on that topic before we move on. This gives access to massive actions in a specific area that will make that quantum leap difference. Just by you guys putting that 2 in the chat, now you have access to really having a breakout year in business over the next 12 months or more, if you take this on. This to me is like one of the most important things about business. Understanding where the money is going and coming from. We get this thing, and then there's business mastery available. All right. So now let's take a look. Today we're going to talk about this income statement. Income statement is really performance, and that's what we call it. What is at the end of the day? What do we do? How do we perform? Do we execute? And what does execution really look like? Execution may look like, okay, well, we have each unit, each truck is intended to bring in $30,000 in dollars in revenue, each one of these units. Now, if at the end of the month a unit does below 30,000, then I know that we underperformed for that unit. All right, it just really is that simple. Well, we underperform revenue-wise. That is a black and white. That is something that we can just say, okay, this is so. Right? There's no arguing that point. The target is 30,000, and the unit did not do it, or it did above it. We're like, yes, win. We did more so than we anticipated performance-wise. We outperformed our target, which is always a great thing. We did 100% or more of what we anticipated. Okay. Now, if we're doing anything less, then we want to take a look at, well, why? Even if we're doing more so than what we performed on, we want to understand, well, what caused that success? What really were the drivers behind the success for that unit? Okay. And then we want to look at other things. If we didn't really know, what this income statement was about, we had an idea in the previous slide. It really is revenue minus expenses, and that gives us our net profit or net loss. Okay. And it is simple that way, and then there's more to it than that. We know that there's more to it than just that. So we have top line things like profit and loss statement is another thing that we call this income statement. Now, if you look at all the things that we need this thing for, back up. These are like some of the three main things that we need a profit and loss statement for: loans, performance, and decisions. Okay. We can break it down in this simplistic format, then we can really have mastery in this area. All right. So now all of us know that if you're a business owner and you're looking to make things happen financially, the people who are going to approve you, like underwrite you to get approved for financial decisions, your lenders, they're going to ask you for a few things. Number one, they're going to ask you for 2 years of tax returns. Number two, I'm going to ask you for this profit and loss statement. And then also going to ask you for a balance sheet. 3. Okay. These are the 3 things that a lender would ask you for if they're going to approve you for financing. Now, when we look at this profit and loss statement, some people get tripped up. I had a conversation with somebody we just brought on as a client, and they have a trucking company as well. And he's really looking to get financing. He wants to build out business credit. He wants to do all these things, which is fantastic. And there's something in me that's like, man, this guy, man, I really want to let him know that it's not just about getting the financing, but it's about the financial health of the business. And if you can understand this part of it, if you can understand what we're talking about tonight, then he understands it's not just about getting loans and building out business credit. It's about printing money. How you can print money with your business. And then you would be in a position to look at lenders like they're crazy. Why would I want to borrow money from you at that rate when I can just keep printing money like I'm printing money with my business performance? That is a possibility, okay? Now, there are times when we need leverage, and well, we don't need it, we can actually use leverage to help catapult that even faster. But we want to understand the health of the business first. And that's going to come with understanding this particular aspect, the profit and loss income statement. Okay, so top line, this guy came to me and he's looking to get this financing. I'm like, hey, look, man, you know, you've made like $57,000 this year. And he was like, what? I just deposited like 40,000 last month. How is that possible? Which led me to believe he doesn't understand, right? It's not how much you bring in, but how much of that you keep. This is the dilemma in the trucking industry, because there's like a lot of people get attracted to a lot of the revenue that comes in. There's a lot of cash that comes into the company, but then you experience, if you're on this call, I know you experience the fact that, man, where did all this money go? Like I always feel like I have to keep going, I have to keep running, I have to keep looking for the next load, and I can't get a breather. Like if you ever experience that, you know, you're in the right place, right? Because a lot of people experience that. Like, where is all that, and where's all that going? If I'm making so much, how do I actually keep this now? Is a dilemma that we face. But he didn't understand that when it comes to the loans, most of the time lenders are going to look at that financial position, like the bottom line number. If they're looking at the top line number, then most likely you're getting a bad deal. Because the lenders that are looking at the top line number, which means the revenue that you bring in, they're just looking to get or position themselves rather in that cash flow that you receive, regardless of whether or not you survive. They're going to bid their money back quick. If they don't, they have leverage, and they don't care if you go bankrupt. Okay, so you want to understand like what the financial health of your business really looks like, and it really deals with how much you keep. Okay, so yeah, revenue minus your expenses, net profit. Now there's so many things in between that, like as far as, you know, the gross revenue, then you have your cost of revenue, like direct costs, and you have your line item expenses. And then this gives you an access point, gives you and I an access point to start really leveling up inside of performance. Because now we can see, like line per line, what is the impact of each line? And what kind of decisions can I make based on what I'm seeing on each line? For example, you have fuel cards. How many of you guys show a one in the chat if you want to have, put a one in the chat if you're using a fuel card of any type. Just let me see how many of you are actually using fuel cards. Okay. Deal. All right, no fuel card there, no fuel card there. So, okay, good. So you're not using a fuel card, but you're paying fuel costs. Right. So get this, guys. You're paying fuel costs, not using a fuel card. Who knows the benefit? The main benefit of using a fuel card. If you were to pick out one benefit, what would it be? You can type that in the chat, or just anybody you want to just kind of shout it out. If you know, what is the main benefit of using a fuel card? Do we all know what fuel cards are? You guys know what fuel cards are? Just checking in, right? Speaking to my people, man, you know fuel cards, right? Fuel cards are, you know, the cards you get access to that are dedicated to pay for fuel, right? There are different vendors that we use to get access to fuel card, like Wex, Comdata, you know, even Motive now has a fuel card of their own, and there's so many others, right? But if we were to say that, what was the main benefit of using a fuel card? What do you think that would be? Now, I put a couple of people onto this one vendor, you know, XPO. Yeah, exactly. Saving money. That's the benefit of a fuel card, saving money. Well, they're really saving money on fuel, to be distinct. You go to the pump, And you're paying like almost $4.50 a gallon at a fuel stop. But with a good fuel card, some fuel cards will get you like maybe 12 cents off, 8 cents off. Like you've got a Pilot card, Pilot has their fuel card, Pilot Find J. They'll give you to start off with somewhere around 8 or 10 cents off the gallon at the pump, right? Which is a pretty good savings because we're doing hundreds of gallons of fuel. So that's a good amount, like at a time. That's a good amount of savings, right? But there are other fuel cards that can get you 80 cents off, 70 cents off a gallon, right? Now, fuel is my number one of my top costs. I won't say number one, but it's top cost inside of the trucking industry as it stands. If I'm not scrutinizing that line item inside of my profit and loss statement, say, well, why is it that I'm spending so much on fuel when the other guy could spend a whole lot less? What can I do decision-wise to source different vendors or get fuel cards that can actually cut my fuel costs, let's say by 30%. Well, you just increased your revenue or your net profit anyway. Right? You just increased the amount of money that you would keep inside of your business by that 30%. All right, because if you're spending in fuel somewhere around $60,000 a year, that 30% could be an extra $20,000. Not bad for just doing some due diligence work. Does that make sense? But a lot of times we're reacting to things. We're not really looking into the line item and say, okay, is there something I can actually do to improve my performance? Like, well, and performance-wise for the income statement is net income. Now, how much money I get to keep at the end of the day. It just doesn't stop there. Maintenance. Well, why do we have to spend this much money on maintenance? Well, why is it that we have to keep going these lanes that cost us more in maintenance because of the terrain? Right? You guys go through like West Virginia all the time. It's like pulling uphill all the time. Why are we doing that? Doesn't make sense when I can go I-40, I-20, I-10, or even hit those other Midwest lanes where I go, to 65, yeah, and hitting up 35 and these other terrains that are not as mountainous and treacherous as some of these other lanes that go up the East Coast or on the West Coast where you have these large mountain ranges. Right, we can actually take a look and say, okay, well, if we're tracking it per lane, this lane is actually costing me more in fuel and it's costing me more in maintenance. Well, I need to stop doing that. It's not worth it. They're not paying me enough to cover it. So let's transition into something else. Right. This is financial literacy. Right. It is very simplistic. Like if we actually look into it, it is simple, but it's not easy a lot of times because it takes some discipline, it takes some effort. Yeah, the terrain is a factor, man. Like all these things count, right? Like when we go inside of a business, especially a business like this, everything matters. There are no small things. There are only things that work and things that do not work. And in order to take a real good look at what's working, what's not working, we need to be inside of this. Right? We need to be inside of this financial statement called profit and loss. And we need to have it tracked in a way where it gives us the data that makes the difference. So what do I mean? The data that makes the difference. I just talked about lanes and where we're going to, like the terrain inside the lane. Now, if we're not even geared to track those things, then we continue to shoot in the dark. We continue to be a reaction in an area and think that something is just wrong with how the stars are aligned against us. Right? Because that's how it kind of goes. Like, man, I must be cursed because I can never seem to get a break. It looks like I'm making all this money, but all of a sudden the truck breaks down. I got to pay all this money in maintenance. And all the money that I just made is gone out the window because I got to have this downtime, repair costs, drivers, all the way across the country, and they need a hotel, they need all these other daily stipends and everything for this downtime while the truck is being repaired, it's being down, it's costing me a lot of money. Why me? And it doesn't have to be like that. It can be, oh, this lane is like impacting us very negatively. Let's not do this. Let's make sure we take this lane that's actually producing a lot more income, costing us a lot less than fuel, costing a lot less than maintenance. We can do the same thing with equipment. Well, we've been running reefer versus dry van, and we just thought that the reefer was bringing in more money. And then we realized, no, it wasn't. It was actually costing us more because we had to spend money on the trailer fuel, and then we had extra repairs that it cost us for that reefer unit. So in actuality, we didn't really make much more money on that at all. And now you're not tracking it, so you don't know. You never know. Right. So we're talking about this thing called performance now. If you didn't realize, we're talking about performance. And we're also talking about, in this conversation, budgeting and decisions. Okay. Now, the two go hand in hand. You see these blocks are overlapping because they do interconnect. They don't just stand on their own. Everything comes together inside of our financial picture here. So the question that I want to leave you with is, am I set up to track my business performance for income? What am I doing right now in this area to make sure I have my eyes wide open? Then the next one is, well, how can I improve it? Like if I haven't been doing it, how can I set it up where I'm doing it this way? And if I am doing it, how can I improve the ways that I am tracking my business performance in terms of the profit and loss statement, income statement, performance? So we just talked about a couple of things inside of this. We talked about, well, what lanes am I taking and how the type of lane that I'm taking can impact me cost-wise, right? Ways that I never even thought before in some cases, going up mountains, it's going to cost me more money in maintenance over time, especially if I'm pulling heavy loads. And even that's a consideration, how heavy the load is that I'm taking. It's costing more in fuel and costing more in maintenance. So there's a way to actually say, okay, well, let's monitor. Well, when, the GVR, the GVRW, it gets above 50,000 versus below 50,000, what are the impacts? All right, so we can start tracking that. We can start tagging it. Okay, well, this load was taken. It was at 60,000 gross vehicle weight. Okay, how much did that actually cost us? We can actually track everything by that particular load, by that particular tag, if you have it set up that way. Right, but are you set up that way? Are you actually designing your business structure, your business systems rather, to track everything that counts inside of the business? So you're not just shooting in the dark, but you're making really pristine and precise decisions in your operations based on purely what is in the best interest of you. Now, if you've been in business for a little while, you've had a lot of runs, this has all been opportunity to gather all this data, all this information. Okay, we brought this much in, but yeah, what type of load was this? What type of lane did we run? What type of equipment did we use? How much did it weigh? What driver did we have in it? And down the line, there's so many other things that we can track in that to see, well, what is making the difference in my performance? And we can see this over time. The decisions become crystallized, man. They become crystal clear as far as where you're going to direct your effort inside of your business, where you're going to steer clear of, and where you're going to where you're going to double up, double down in the business. All right, what type of lanes are you going to seek? Now, we also talked about vendors. We already know certain vendors cost more. This doesn't have to be necessarily just fuel cars, but it can be like who we're choosing to do the maintenance. If we know going across specific regions of the country, if we stick to a certain lane, like a dedicated lane, we have a better shot of getting more favorable maintenance rates. Then it might make sense to just continue to do those lanes as well, because I'm actually cutting costs there too. The type of equipment that I'm using, like reefer costs more to maintain than other pieces of equipment, right? Flatbed is probably the least expensive piece of trailer equipment to maintain compared to a dry van, compared to a reefer, compared to low boys, heavy haul, like everything that we're using to carry freight across the country, we want to look at, well, what's actually costing us less to carry versus what costs more. And if I'm actually getting enough revenue to cover the impact of those costs and then leave me with an extra profit. And if it if it doesn't give me any more so than just using the equipment I've been using, then it doesn't make sense to go that route. And again, if we're not tracking this, we won't know. So what's next inside of this process? Next thing to do is make sure we have all the things, the components that we need, right? Components that we need to track our business. That'll be the next thing. A couple of things that I wanted to get into with you guys before we, start opening this up for Q&A. Because this is a really, like I told you in the beginning, this is going to be a very pointed conversation. It's going to be not a whole lot of information, but it's going to be like stuff that you can really unpack and use and deploy inside of what you're doing if you decide to go to work and really systematize this whole process of tracking and then understanding line per line what are the impacts. Okay. Firm grip on reality. This is what we want. Profit and loss statement and all these other financial statements, to be honest with you, are things that we use in order to have a firm grip on reality. Right? So we have net profit. We can look at if we're overspending in certain categories versus other industry standards. We can start planning for, our taxes, quarterly estimates, making sure that we are not tipping the tax guy. If we have a plan in effect with that, we can make choices on how to keep more of the money instead of pay taxes on it. You can understand how to pay yourself, like how much you need to pay yourself one quarter versus the next quarter, one month versus the next month, based on performance of your business. It does not make sense for you to pay yourself $10,000 this month if your profit was like only like 12,000. Right? It doesn't make sense because now you're paying yourself that's money that you're paying tax on if you're an S corp. Right? If you're a single member LLC and sole proprietor, well, it doesn't matter. All right. But if you're an S corp, you want to understand exactly, well, how much does it make sense? What makes sense for me to pay myself based on the business performance? Now you won't know this unless you're tracking this and understanding it period by period. Okay. Now, we've been getting into this conversation talking about, well, this is a conceptual thing, right? And my idea for you who are on these calls is to make sure that you're set up for practical application of things. A lot of what we talked about can be practical application. Now we sparked the interest inside of like, well, there's an opportunity here, an opportunity for you to be able to change the game inside of your business performance just by looking at what has been impacting that performance by the books, like looking at the numbers. All right. Now, practical application means, well, now that I have the system, number one, I want to put the system in place so that I see everything. Right? What does that system look like? We've had conversations on different tools to track your business and monitor your business. We have accounting software, which is fantastic. It takes into account everything that we're spending. That can be a QuickBooks, that can be a Xero, that can be Zoho, that can be Wave or whatever accounting software. It could be a spreadsheet. Spreadsheets, you're going to spend a lot of extra time. Okay, but you want to be able to have a software that not only monitors the income and the expenses that go out, but enables you to track it in the ways that we discussed tonight. Now, if you don't have a software that allows you to do that, then you want to get something that allows you to do that. All right, so you can have the granularity and the clarity of what the impacts are on each line item and each lane and each driver and all the way down the line of all the things we talked about tonight and more. Okay. But once we do that, we set up the system. Then we can go to work once it's being tracked. We can start making choices. Supply chain. All right, supply chain is something that we want to watch. And what is supply chain? It just means well, who I'm using to purchase my resources, right? Where am I sourcing my fuel? Where am I sourcing my maintenance? Where am I sourcing my equipment? Where am I sourcing my insurance? Where am I sourcing all the things that I have to pay money for my company, right? Now I can go line by line and understand all the vendors that I'm using and make choices on what makes sense versus what does not. Who am I going to go to based on complete value? So we call this a value chain, really, not just supply chain. Now, it may make sense to pay more for certain vendors because they're delivering more value, even though their cost is a little higher, right? Sometimes you spend less money on a vendor, but end up having a larger cost because you're not really covering all bases. You're bleeding money. You're not really doing the job they need to do to provide the overall value, right? So we want to be able to look at these things line by line to see where it is that we can improve our performance and improve the value chain by vendors. Then we also can look at lanes. We had a good talk today about lanes and the impacts of those, right? Well, you make choices day in and day out on taking certain loads that they're doing and running certain lanes. And are we really present to the impact of it? Are we really present to whether or not this lane is producing the intended result over time? Or am I just going about my day thinking that I'm cursed? I just can't get a break. I wish I could have more, but there's nothing I can do about it. Well, I'm just telling you right now, there's things you can do about it. You can really look into how you've been operating. Like, what is a true performance? This is running it by the books. Complete reality. What have I been doing up until now? Now I'm empowered to make new choices so I can have a new result tomorrow. This is the power of running it by the books. Okay. Now, if we don't approach it in this by the book philosophy with this whole, in reality and performance outlook, then it can seem as though that you have no control. It can seem as though that there are things that we have to react to. You just have to play the cards you've been dealt. But instead, really, you can issue yourself a new deck. Right? You don't have to play the cards you've been dealt. You can actually choose the cards you've been dealt to a degree by running it by the books. Okay. Now, with that being said, let's open this thing up, man. Let's open it up for Q&A. All right. I want to hear some feedback from you guys because we've been talking about this. There's a lot of new insight into like how to treat a profit and loss statement. I know that people ask us for this when it comes to financing, and a lot of times we just find the administrative work to be a little tedious. I know nobody likes to do paperwork, right? Especially in the trucking industry, nobody likes it. Even though you realize most of this industry is paperwork. A lot of paperwork in the industry. Right? I mean, you figure you get in the industry because it's truck driving, and there's a lot of action outside of administrative work, and it's really not. There's a lot of administrative work inside of trucking, and we don't like to do paperwork, right? But we have new insight today. What did you gain from tonight's conversation? What can you actually put to work for yourselves based on what we're talking about here today? And also, what questions would you have? Go. Think outside of your experience, right? Well, if you're in business, this is all inside of your experience, doesn't it?
So Cheston, let's have a dialogue with those, because everybody on here are at the beginning stages, some of us anyway, of acquiring our first truck and starting out in business. So before we put the cart before the horse, give us the line items needed from point one.
Yeah, so that's really good. Thank you for that. You got to know who the audience is. If you're brand new, you haven't really gotten started in the industry, the things that we want to consider is counting the costs, right? Number one, when we talk about counting the costs, we also talk about counting what the expected and realistic revenue is that we can bring in for what we're doing, right? So if you have a piece of equipment, you want to do the research to find out, well, what does your piece of equipment actually bring in?
Mm-hmm.
You know, what is it? What is it? What is it typical? Realistically, what is it that this piece of equipment can bring in on a monthly basis? I gave you a number about $30,000, which is a reasonable number to have. $30,000 per unit to bring in a combination vehicle anyway, right? Now, if we know this and we can have that expectation, we have a measurement point to say, okay, well, did we actually hit the target or no? And if we hit the target, great. What is it that we can contribute to those wins? And what is it that we can do next time to duplicate that performance or do better? And if we didn't, it's the same thing. We want to look at it and see what really didn't work about that. And we want to make sure that we inject those things. We see the things that did not work, and we just stop doing the things that don't work, and we inject the things that do. And some of the things that look like that are what we talked about today: fuel cards, lanes, right? And what lanes are we running? What type of equipment are we really working with here? We want to make those choices. And then, like as far as like line items, we have heavy costs in the industry, like insurance costs. You would definitely want to know like what options are there for insurance companies, because they're not all the same. Some insurance companies will give you a greater and deeper discount than others. Specifically, if you're in a specific state that is not favorable when it comes to insurance to begin with. This is where the bigger opportunity is going to be, because there's more opportunity to save when those rates go higher in certain regions. And knowing those companies and shopping around to the vendors that actually work will make the difference. We talked about, fuel and maintenance. These are your major costs, right? Insurance, fuel, maintenance, drivers, all these things are the things you want to actually line item out to see, well, what is this really going to cost me realistically? Do your homework. Then we have other things like your travel costs, like little knickknacks here and there. Like if you're an owner operator, knowing how much it costs you to be out on the road, showers, parking, truck washes, how much you're going to spend on your meals, like meal prep, all these things that, especially in this area with the meals, you want to understand like the dynamics of it, per diem, what you're allotted, like the impact of that, what you can take, and what the true nature of it is. Like, can it be a deductible expense for me? All right, so you want to see those costs as well. If you have drivers, definitely those costs are a consideration. Occupational hazard insurance for certain drivers. Then you have workers' compensation in other situations. And man, so there's certain, like there's a whole line item of expenses that you want to consider when doing this. Now, if we had more time, and I think on one of these calls we can actually do that, just go down the line and say, okay, this is a typical income statement for a trucking company. These are the things you want to look at, right? From your IFTA to your 2290 expenses to your permitting, you're going through certain port of entries and what the costs are there to actually go through these areas. When you're thinking about fuel tax, like IFTA specifically, like how do you navigate that in a way where it makes sense? Like you're going through certain areas, driving distance in certain areas a whole lot of time. Well, is this an area where I can actually pay lower taxes for fuel, right? Can I actually get specific lanes that are geared toward paying lower fuel tax? And that way, when I fuel up, I get rebates instead of owing more money, and that's possible to do with IFTA, right? If we're planning for it, or at least not having to owe a whole lot when it comes to filing our IFTA reports at the end of the quarter, right? But there's so many other things that go along with that, guys, that we want to consider. And really, for yourselves, the thing that you want to do is sit down and start looking at all these things and start counting the costs and come up with a reasonable expectation. If you're brand new, I remember when I started my trucking company, I I had an idea because I started out slower. I went and drove for a larger company for a while. I started out as a company driver without having all the owner operator costs, and then I shifted into being an owner operator so I could understand all those costs. And my intention when I was doing it was to be on that end of it, to own the company, just to know what I could expect. Right? And it might take that for you. It may take maybe a couple of years to do that. You know, it helps because you really have a good idea of what it takes to be out here and operating a truck, right? From the driver expense to all the breakdowns that you can have, even on newer trucks, like what you could expect maintenance wise to cover. Right? That makes a whole lot of sense to do. And hopefully that answers a lot of your question there, Teresa. There's so many other things that we can get into as far as line items concerned. We won't have the time to cover everything today.
Right. Does anyone have?
Hey, Cheston, I got a question.
Sir.
Oh, congratulations too, man.
Thank you, sir.
All right. I came in a little late, but I heard you saying something about how you supposed to basically pay yourself. I heard you say if you made 12,000, it would be crazy to pay yourself 10,000 because of the taxes.
Yeah.
Oh, can you pay yourself minimum wage and just have a company credit card and use the company credit card to pay a lot of your bills? Would that be better?
No, I can't say no all the way around. It does depend on how you set up. Like it's an LLC. If you're a sole proprietor, then all the money the company makes is yours. It doesn't matter. So you just take the money as a draw, right? So if you don't have any type of like S corp structure or another corporation, then the money the company makes is your money anyway. You're paying tax on it regardless. Okay. Now the other thing that you mentioned was about taking the company credit card and paying your own personal bills. No, you never do that. Never do that. All right. That's one is commingling, and it opens up the door for you to be liable. Like corporate bail. It is a out of compliance thing. Okay.
Exactly.
Now, what you can do is understand the nature of the business, like what is business versus what is personal. Like there are certain things that we can do to cover the resource usage of your personal assets for the business. One of those things is like a home office, right? Everybody that gets started out, well, a lot of people that get started out don't have like a building that they purchase to run the company out of. They actually get the equipment, run the company, and they work out of home, really. So there's a cost associated with that. There's a resource taken up for the business, and that's legitimate. That's for the business purposes. Now you can do that, and you can also have other things like your travel back and forth to like related to the business with your own personal vehicle. Like for instance, like a lot of people who pay parking, they go to an airport to pick up they go to an airport, get on a plane, go pick up a truck. All these things are associated with the business, right? So those are like deductible expenses: the parking, the mileage, the plane ticket, the meals. Everything that's incurred while you're making that trip is business expense. Because you would not incur that expense otherwise. If you did not have the business, you wouldn't have any of those expenses. All right, those are what we call ordinary necessary expenses. Okay, but when I hash those out inside of your business and know exactly what those are, and the recommendation is to have somebody that you work with in your corner that can help you, like navigate that. If you have a question about it, you have somebody in your corner you can talk to, a tax guy, advisor, bookkeeper, whatever that is, to make sure that they advise you appropriately on how to deduct those costs. Okay. Yeah. So never take your business credit card to pay your personal bills. That is a no-no. Okay. We want to have clear directives for how money goes in and out of the business. Okay.
All right. Thank you.
Yeah, you're welcome, sir. Now, you did talk about paying yourself, and then the thing about 10,000 versus 12,000. If you're like, and I mentioned that as like an S corp. Let's say you're an S corp. It does not make sense to pay yourself that much. All right. With S corp, once you to comply by paying a reasonable wage to the shareholders, to the officers. Okay. Now, if you're an owner inside of the S corp and you're active in that S corp, then you want to have compensation for your services as per compliance, and that compensation is subject to self-employment tax. All right. Now, the more you pay in that compensation, the more self-employment tax you're paying through that compensation. And it is not necessary to pay that much in self-employment tax if you have an S corp. That's the whole purpose of people getting an S corp structure, is to not have to pay the exorbitant amount of the self-employment tax. One of the main reasons, right? So if your business is making a profit, well, you want to understand the portion of the profit that you want to take as a wage to stay in compliance with the S corp criteria and not overspend in self-employment tax. See, the IRS, they're not going to stop you from paying more wages to yourself, right? And paying more in self-employment tax. If you do that, well, that's okay with them. They're not going to block you. They're not going to come after you for compliance regulations. You're going to say, okay, he just paid himself more. That's cool. We'll take more self-employment tax. Well, that's really Social Security Administration. They're saying, hey, yeah, good job. We'll take that, right? But if you pay less than what you're obligated to, well, that's when you're going to have scrutiny. Okay. Well, where is that balance? Where do you have that compliance sweet spot for the S corp compliance? This is where you want, like, the profit and loss. What we talked about tonight is a key indicator on what that's going to be. Okay. And that's why we want to understand this income statement as well. Like, how much money am I making, so that I know how much I can pay myself reasonably as an S corp. Okay. And this is also like people don't really talk about the application of it so much. You hear a lot of videos about S corps can save you money on self-employment tax, but when the boots hit the ground, well, what does that really look like for you? Right. That's what you want to really deal with out here in reality. Any other questions?
For a company starting out and they have a home-based business, what percentage of the home can they write off?
Yeah, so technically the portion of the home that is going to be used for business. Now, whatever the square footage is of your office, if you can legitimately claim that that's the square footage of the office space that you have. Right now, I'm in the process of getting into a house. We were looking at houses the other day, and we just applied for a house. Now, the house that we're going to get, the whole lower level, man, it's awesome, man. I have like a new office space. It's like a whole level. I'm like, man, I could write this whole thing off legitimately. It's like a secondary entrance and everything. I put a sign up, and it's like somewhere around like 600 square feet of space.
Yeah.
That I have there that I could legitimately write off, right? For all those expenses that we have for the home. And that's not the case for everybody. Some people have like smaller offices. Now there's a simplified formula for IRS is 300 square feet. It's a simplified formula that they allow. Okay. Now, with that being said, if you're doing more than 300 square feet in office space, you better be able to prove that.
Mm-hmm.
Yeah, I'm gonna take mine like a champ because I can prove it. I had all this square footage. I got the tape out, measuring it. It's like, hey, this is the whole thing right here. Office, boom, boom, boom. Right. And if they come, I say, hey, look, this is what it is. And they say, okay, you're good. But for other people, if you don't want to really go above that 300 square foot mark, unless you can prove it. Now, what a lot of people do is they take legitimately the square footage of the space that they're using in the house, so that they're, in without, compliance risk. You don't have any compliance risk there. Okay. So that percentage, based on the square footage that you're taking up, whatever that percentage of the home is, and the comparable expenses that go along with that square footage of the home. So percentage wise, that's what you can deduct home office wise. If your business is profitable, otherwise in that year or whatever, otherwise you'd have to carry that forward. It's a little more technical. Okay.
Hey, Cheston, on that note, is that for S corp or just LLC, sole proprietor ownership?
Any business can take that home office deduction. There are different ways and different strategies to do this, okay? But just to keep it simple, any business that you have, if it's home-based, you have that available. Doesn't matter.
Okay.
Good deal. All right. Any other questions about that? That's a good one. Okay. So any other questions about that? Yeah, guys. So tonight's talk really is about, the income statement performance-wise. And I know that a lot of us are new inside of the business, and we don't have a lot of the data. But the thing that can really be gained from the conversation tonight is to set yourself up to win from the start.
Hey, Cheston, I do have one more question. Let's see, we got a little bit of time.
Go ahead, sir.
Okay, like you were saying, the square footage of your home, we'll just say your office space, 300 square feet, in your house, 2,500 square feet. How would you divide the math up to make a payment deduction towards your bills at the house?
Yeah, so let's say that you have utilities that are $12,000 a year. Okay, the number that you gave me is 12%. Okay, so 12% of that 12,000 a year is what you would deduct for your utilities, like internet or whatever that is. Let's say you have insurance costs, 12% of what your insurance costs are for the home. Let's say you have any repairs or maintenance going on with the home, 12% of your repairs and maintenance that went along with the home. Let's say you do some groundskeeping, like all this pest control, all these other things, all these services that you have for your home expenses, all of your home expenses. Now you can say 12% of that is dedicated to the business expense. And it's deductible based on the numbers that you gave me.
Okay, well, thank you.
Yeah.
That is okay. So we have a couple more minutes now. In reference to that, Cheston, say that you have an office away from your home that you go to daily, but you still have an office within your home.
Mm-hmm. You still have it. You can still take the home office deduction. Right? It doesn't change the fact. Even if you have that office and you do legitimately have a home office, you can still take advantage of the home office deduction.
Okay.
Okay. Yeah, so that's something that people really don't think about either. You can still do that.
Good deal.
All right. And there's so many other things as far as tax strategies are concerned. Like there's something called an accountable plan. This is what I'm thinking about as we're speaking about home office deduction, where you can have a reimbursement plan for yourself. You can say, okay, we're actually utilizing these resources that are considered to be personal assets of the owner. And this is the agreement that the business has to the owner to compensate and reimburse that owner for the resources being used. This could also be like vehicles and all these other travel expenses that go along with that for an accountable plan. Okay. That is another option.
Okay.
Can't do both though. You're either going to have an accountable plan or you're going to take those deductions like home office deduction.
Oh, so you can't do both the home office and the offsite location?
You can do the offsite location and the home office. What I just mentioned was something called an accountable plan.
Okay, I heard that part.
Yeah. So if you have an accountable plan, well, then that takes place of that home office deduction. You're not going to have both of those. All right. If you have an accountable plan that takes into account the home office resource of the owner. Okay.
Okay.
All right. That is our time, people. It's a great conversation. Good to be back with you guys. I will see you next week, next Monday. Today is my wife's birthday.
Oh, happy birthday to her.
Yeah.
Yeah, that's cool.
Yeah, guys. I will see you next week. My birthday is going to be coming up in 10 days from now. Well, it's not a week from now, next week, and the next week. So you guys are good with that. I'll be here on Monday for that.
Oh, you happy about that?
Yeah, man. Yeah, listen to this, guys, before we wrap up. We got married on July 7th. My wife's birthday is on today, July 17th, and my birthday is on July 27th. So we got
10
all the
days.
sevens covered
All the sevens.
inside the month.
You need to play that number, 777.
Yeah.
Smart man. All right, Cheston, go ahead and get your wife on out the house, man.
That's what I'm about to do, brother.
All right. All right.
All right.
Thank you, Cheston. We'll see you next week.
See you next week, guys.
Thanks.